Hello guys, today is Friday, February 7th. It's time again to evaluate our portfolio and market. Let's talk about market. Market is continuously trade in range. Today, after another tariff talk, it's dropped down approximately 50 points, and volatility went up from 15 to 16, 1 point just today. But in general, for this week, we got bounce up from 59.50 approximately area. Right now we are about 50 points higher than we were on Monday, and VIX also declined a little. So our portfolio continuously performed well. Right now we are close to all-time high. It was today at all-time high, but after this drop, we are pretty close to that level. It's approximately 4% from the start of this year. Let's see our position. This is our total ES futures position. You see how safe it is. Let's see all of them separately as usual. So first let's talk about Balalaika trade. We actually did a roll a couple of days ago. It was a time when our naked puts was too low, about delta 3, about 30 DT. So usually when we reach delta 3, we usually roll that naked puts up to delta 10 and out approximately to 60 days till expiration. So this is how it looked like now, and it was the first roll, and second roll we did just today. Let me see, just a sec. Yeah, we roll two of our naked puts and add vertical. Add vertical as a hedge. Now we have how many? 1, 2, 3. We have 3 verticals right now as a hedge, plus 2 long puts, which is very good for this structure. Even I think that we can use some of these hedges if we need for our position. So hedges are so strong here. Next, let's see our V8 position violin. We closed V7 with good profit this week. V8 right now is about $700 in profit. Our naked puts 42 days till expiration at delta 7 approximately after today's drop, and it's in good safe condition. I remind you that violin is one of our favorite strategy because it's low touch. We don't usually do much with that, and it's performing very well. We even didn't have for a whole year even one lost position of this strategy. Also, when we close our V7, at the same time we open V9 position. It's brand new position, just 1 day at the market, and after today's drop it shows small loss, approximately $100. So how we did this? As usual, we open approximately 60 DT 2 naked puts around delta 10, and hedge it with delta hedge, 2 longs, 3 shorts at delta 15. So that's how it's look like. Next, let's talk about our CDH and income positions. We also did roll yesterday also, I believe. We roll our income one position. It was less than 30 DTE left, and it was at very low delta. Right now we roll it to 56 DTE, and we did it at delta 10, but after today's decline it's a little bit higher delta, approximately 11. So this is how it's look like, our income one. Income two position is in very good shape. It's 42 days till expiration at delta 4.5 right now. So actually I plan to do something with it today, but after drop I decided to hold till next week. Income three, the third our set of naked puts, is at 52 TTE right now, and delta 7.7, also pretty safe. Now let's see how our CDHs perform. That's how it's look like. It's in small loss, all three of them together, about 1100. I just would like to remind you again that it's a very young position. It's not actually hedged yet. It will be hedged in a couple of months when we start improving it. Right now we just set it up to virtually at zero cost, and later when it will be a little bit cheaper after 60 or 70 days, it will be very inexpensive to create hard hedges from it. So if we combine these three CDHs with our income position, this is how they look together, and it shows 2,800 in profit. It's, by the way, in 1 month, 31 days till we open that position. But I would like to remind that we also have to include here all remaining vertical hedges of A, B, and C ladder. Let me add them. This is how it's look like with them. So it shows very high profit, but it's already old profit. I just would like to mention that OptionNet Explorer, until we close completely the position, it will continue to count all previous profits and losses, and because some of these positions up to 144 days since we open it, this is why our profit of this structure so high, more than $14,000. Also, if you remember, we still tracking one of our D ladder, the one ladder which we have. It's ladder D. So I would like to show how it's look like right now. It's extremely safe for some reason. I don't know. Maybe I forgot something to add. 2D3, D5. No, everything here. Let me see. Looks like it's only hedges left here. Actually, no. 28 days till expiration. We have two short puts, so I was right. We still holding this position. I just don't know why it showed that way. Oh, here it is. I just choose long expiration date. This is how it look like. So it's also in big profit because we continue tracking it. It's 134 days since we all start trading them. So it's 4,000 in profit. Our naked puts 28 days till expiration at delta 8. So maybe next week we will roll them up and out. Depends what market gonna do. If it will go higher, probably delta will drop to 5 or something. And 1 week or maybe a little bit longer, it will be time to roll it and get additional profit from it. That's it for ES positions. Also, we have our wheels of on micro ES. If you remember, we have left two different expiration. One of them already 60 days long, and it's how many? For 2 weeks left till expiration. We adjusted. Now it shows small negative delta. We reach our tail profit, and we use still holding it as an additional protection for our next expiration. So next expiration, this is how it look like. It is 32 days since we open it, and it's 42 days till expiration. So we're approaching also our tail profit. Probably on Monday, if nothing happened, we're gonna start new expiration. It's gonna be April 30th, 82 days till expiration now. On Monday, it's gonna be 79. So this is where we're gonna start new tranche of our MES wheel position, and probably we close some lowest short of this expiration. This one strike 52.50 to reduce risk here. Reduce risk delta from 6 to 2, and we will add new expiration 79 days till DTE. This is how it's look like. Also, we have oil position. If you remember, it's doing well, even oil going down. If you remember, we opened it approximately at 66 level. Right now it's 76. Now it's at 73. Oil dropped down $3, but we still in profit, which is good. We continue to hold it, and sooner or later we will get our tail profit, I think. Even if it start going harder down, and our 3 shorts will be at delta 20. Right now it's delta 11. We will adjust it to increase that tent profit tent and reduce risk. Also, the last one, we have TLT position, which performing very well after TLT bounce up. At the lowest point it was around 85, right now it's about 89. We are in good profit. And if you remember last week, we had 200 shares of TLT, which we were assigned. We hold it for months, a little bit longer, to get dividends, but we decided to close it and replace it with in the money naked puts, short puts, to replace our longs. Why? Because 200 shares hold a lot of cash, and we prefer to keep our cash in more guaranteed and stable vehicles like T-bills or bill ETF or anything else, or box ETF. So we usually hold that our cash there, and to relieve that cash from TLT position, we sold our shares and replace it with in the money naked puts. We did, let me see, which one we sold. This one, we sold two naked puts at strike 92, so it's in the money. We replace our longs. This is how our structure look like now, so we will continue to operate with short puts and short calls to make it more profit. TLT, you know that market is a little bit nervous right now about interest rate and tariffs, and it's helped us because IV of TLT options is elevated, and it's very good to sell options, especially straddles, what we're doing here. That's it for today from our position. I would like to discuss with you, I promise, how we improving our hedges. I hope you got that idea that when we roll our naked puts and get credit, we have to spend part of that credit up to, not up to, an average 50% of that credit we use to improve our existing hedges. How we do that? We can do it three different ways. We can do roll up our longs, we can roll down our shorts, or even close our shorts. But usually the most common way to do that, it's roll longs up. Why? Because we would like to have some hard hedges for our ES position protection. And hard hedges, what I think that hard hedges, what I name them, or the first line of defense, it's hedges which is a delta around 10, maybe a little bit lower, up to 8. 8 and higher, it's first line of defense, and I would like that we will have at least 1/3 of our hedges compared to amount of our naked puts. So if market going up, our hedges going down delta-wise, we need to improve them, and when we roll our naked puts, we use part of our credit to lift up longs of our hedges. But another way which I would like to show you, I actually plan to do it today, but after market dropped down, I decided to hold it till next week. So it's another way to improve your hedge, and it's actually free improving. Free, I mean, we don't spend any debit for that. We spend something else, but what we spend, you know, we have another commodity in our trading. This commodity is a risk. So we can, instead of spending cash, we can temporarily increase a little bit for short period of time our risk for replacement of improving our hedge. I will show what I mean. Let's go and see our A6 position, which, by the way, we improved this week by rolling up our longs. Just a sec. Opa, that's wrong one. Here. we are at A6 position. It is a vertical with 98 days till expiration. We have long at delta 10.4 after today's decline. Why? Because yesterday we lifted up to improve it and lift it up to delta 10, but after today's decline it's a little bit higher, about 10.4. But our shorts is 4,800. Let's go and see them. Here it's 4,800, delta approximately 4, and cost of that right now approximately 16 points. So if we close that position, we will get just a long at delta 10. It's a perfect hard hedge. But how are we going to compensate that? Now let's go and see our income 2 position. Income 2 position. You can see we are here 42 days till expiration. We have two shorts, which is pretty low and safe. It's approximately 4.4 delta. So if we add, if you remember that short put of hedge cost us about $15, so we can go and sell here one short at the same price. It's gonna be, yes, we increase our risk for 40 days, but at the same time we make our hedge absolutely hard and perfect, because now it's just a long, and we don't risk much here. I explain you why. So if markets stay here or go higher, we will get free improvement of our hedge. But if markets start declining, we're not losing anything. We can go back anytime the same way. We can close that 55.50 short if it will be at delta 15, 20, whatever you decide that it's time, it is already too risky, and sell the same kind of shorts on our hedge. We won't lose much, but we're gonna win unless it's gonna happen today, that drop. If let's say it's gonna happen next week, because this short is just 42 days till expiration, theta will work in our favor, and it will get, even after drop, it will be cheaper than short of our hedge. This is how I usually reduce amount of shorts of my hedges. You can do this way improvement of any hedge, CDH or vertical, doesn't matter. But I just would like to mention right now we improving income 2 position, which is 42 days till expiration. It's not the perfect way to do that. I prefer to do it income 1, but we did already roll of that short puts yesterday. So if we didn't, I probably gonna add it to income 1 because it was 30 days till expiration. Right now it's already rolled, so we don't have much choice to choose income 2. Do we have to do it? Probably not. I just would like to do it for you, just you will see the difference. If you remember, we're doing the same kind of stuff with our Vega hedge when we set up the perfect hedge 1-to-3 ratio long term, and sell one naked put 30 DTE just to make, we hope that a market won't drop, and that additional naked put of 30 DTE will expire it or will be so cheap that we will buy them back. This way we will make our Vega hedge much stronger and at the same time at zero cost. It's the same idea here. So we replacing long-term shorts of our hedge with 30 DTE of short put, which we add temporarily to our income trade. And again, it could be reversed back if it will be under attack. That's what I would like to talk about for today, and I would like to answer a couple of questions from Discord. Kyle asking similar question to this: could you use your currently open hedges and openly talk through their strengths? A quick look at them suggests that only one hedge is a first line of defense. There are many good second line of defense hedges. How do you evaluate to determine the next chess move? A visual view is OptionNet Explorer. How many are Delta 7 or greater, others? Yes, I just would like to say that Delta 8 is not some kind of trigger that you have to improve it right away. So if your hedges drop a little bit below Delta 8, you just plan your next move. So it means that next roll of your naked puts, you will probably roll up one or two or three of your hedges to make it above Delta 8, which we count as a first line of defense. So yes, again, I wouldn't like to show here. Actually, I can if you want. So right now we have, for example, A6. It's a perfect first line of defense hedge because we did improvement just yesterday, and we have long right now more than Delta 10. So it's a perfect line first line of defense hedge. Unfortunately, I don't think we have more. Some of them lower than that. We add also another hard hedge, first line of defense hedge to our balalaika today. Let's see it. Where it is? Yes, we have two of them, two vertical hedges of our balalaika 5250 longs at delta 9.7 with shorts 500 points below. So we have already three. Plus we have very good in balalaika trade 98 DTs just longs at delta 7.3. Yes, it's a little bit less than 8, but don't forget it's a naked long put, so it's very hard and strong hedges. So I think that for our portfolio we already have enough strong first line of defense hedges. But if market continue go up, so you just plan. If you see that you don't have enough of them, you just choose which one to improve. I prefer to improve hedges which is more than 90 days till expiration, just to use that hedge a little bit longer. But it's nothing wrong if you improve shorter term hedges as well, so it's up to you. And another question from Bob: can you discuss the protection of portfolio with CDH trades in between the time you are open a CDH and the time that you improve the CDH? There must be other hedges in the portfolio that protect you before you improve the hedge. Yes, guys, if you remember, I made that example about professional Swiss army and peasants which you recruit for free. If you do that, you can't fire your professional Swiss army at least until you train perfectly your peasants, that they start taking care of the duty. So yes, if our CDH is not matured and not improved yet, we have to continue add our verticals the same way as we did before, or improve verticals which already have from our ladder, the same as we did A6 protection improvement just yesterday. When your CDH will be matured, it will be cheap for improvement. We will start improving them, and we'll continue to add new CDHs, probably once per month. We will do CDHs long term, and that one which mature, we will start improving, and it will be, I hope, less expensive way to protect our naked puts than just open hard hedges, which we did before. Also question about CDH for small account, which we open 2 longs, 3 shorts instead of 3 longs, 4 shorts for bigger position. How it's asking question how I judge hedge effectiveness. It's no effectiveness of CDH, guys. One more time, it's not a hedge yet. It's zero. It's zero effectiveness because it's free. Nothing which free is effective. Just wait when it's mature and will be less expensive for improvement, and we improve them, and after that we can judge how effective they are. Okay, thank you very much, guys. Have a good weekend. I hope that next week we're gonna get a couple of another rolls, and we will continue to perform. Thank you very much. Bye bye.